Shall we start? I hope you all are fine and safe. Having that hope or expectation, I'm going to start today another topic called compliance function. If you follow our class continuously, you may aware that we have completed 4 topics so far: incorporations, license of financial institution, shareholders, and finally we have studied about risk management function of the financial institutions. And there are more than 8 topics to be covered. So as I told you already, I will not follow the topics as listed in this order. I just selecting the topic based on the importance as well as some sequence which is convenient to me as well as to you all. So the last 3 class we have studied about the risk management functions, and we have gone through some past papers as well. So today I'm going to start the compliance function, which is sort of connected to the risk management functions of the financial institutions. The risk and compliance is sort of very similar function. Both are in the second line of defense, but in some financial institutions, the same set of people are managing the risk as well as compliance. But in some other financial institutions, the risk and compliance are two separate department or divisions handling that separately. So I think after the risk management function, if we study the compliance function, that would be helpful to you all to understand easily, and these are sort of connected one. And exam point of view, this is another important topic, because most of the time, I'm not saying always, but most of the times compliance functions are the questions related to compliance functions are coming for 20 marks, the full questions, and you can earn 20 marks if you are familiar with the stuff which we have studied. We are going to study at this class, during this class. Having that sort of introduction, I'm just moving to the compliance function. So before that, I think you can able to see my presentations and listen my my presentation as well. I hope if there is any interruptions or anything, please let me know through the chat box. Okay. Before moving to the compliance function, it is better to start with compliance risk. In the last class, last few class, we have studied about the risk management functions, where we have seen the financial risk and non-financial risk. In the financial risk, we have studied 3 categories of risk mainly: credit risk, market risk, liquidity risk. And in the non-financial risk, we have studied several number of risks, mainly the operational risk, legal risk, reputational risk, strategic risk, so on. The compliance risk also one of the non-financial risk. Okay. So if we see the definition of the compliance risk, is an exposure to the legal penalties or financial punishment and material loss an organization faces when it failed to act in accordance with the industry law and regulations, internal policies, or prescribed best practices. Here, you have to understand that compliance risk, which is sort of risk exposed or financial institution exposed to the legal penalties, financial punishment or material loss on an organization face when it failed to accordance with the industry laws and regulations, internal policies and prescribed best practices. If we simply understand what is compliance risk, it means any risk arise to the financial institution simply by non-compliance of the rules and regulations or laws, etc. The losses could be the financial losses, reputational losses, or business continuity losses. Any kind of losses could be arise by non-compliance of industry law or regulations or internal policies or prescribed best practices, which is called compliance risk. For example, we can say, as we have already discussed, since we have already discussed about this liquidity matter and liquidity risk, the statutory liquid asset ratio, I like to take the same example here. When a bank failed to comply with the 20% statutory liquid asset ratio in their business operations, then that particular bank has to pay penalty to the central bank. That's, you all know that. We have already discussed about these things. For example, each and every liability, deposit liability, the commercial banks or specialized bank, they have to keep 20% as the liquid asset form. That we have already discussed. That when a bank, it is a legal statutory requirement. It's a legal requirement. It is mentioned in the Banking Act, 1988 Banking Act mentioned or required that every banking institution should maintain 20% liquid assets. So this is a statutory requirement or legal requirement. When a bank fails to maintain such a 20% liquid assets, then if the central bank found it, then the particular bank has to pay a penalty to the central bank. That's a penalty calculations. So here that the bank, the particular bank or financial institution exposed to the financial punishment or incur a loss, financial loss due to the non-compliance of liquidity requirement, statutory liquidity requirement. So that is a kind of compliance risk. So we can simply say that what any of the losses, it may be financial loss, it may be reputation loss, it may be business continuity loss. Any losses arises to a financial institution simply because of non-compliance of laws, regulations, internal practice and prescribed best practices, that could be a compliance risk. Here we have to see the word prescribed best practices. For example, some are not required by the law, but the best practices may require that a person or the company has to, financial institution has to run in this way, particular way. So if they violate that best practices also, that also will lead to the compliance risk. So failing to comply with the rules, regulations, specification would bring cost consequences like litigation, potential damages to the business and its reputation. Again, we have to see that there are due to this there are two or three type of losses. financial losses, which I gave the example for the financial losses, and there may be reputational losses. For example, if a bank or finance institution not comply with some tax laws or violate the tax laws, and if those informations went out to the press, or if some financial institution or bank not comply with the labor laws, and they don't pay the EPF to the staff, or some other any labor law violations, and it goes to the press, then that may create a sort of reputation risk to the bank or finance institution. And that reputation risk also may lead to the or can be considered as a compliance risk. That's why it says that it may be the business or financial loss, or it may affect its reputation. And for the bank and finance institution, reputation may be the sort of one of the important concept, or one of the important to maintain the reputation to get the deposits. And actually there are some BIS, Bank for International Settlement definition for the compliances I gave to you all, because there are some questions in the past papers. What is compliance risk? And if they ask what is compliance risk, then you can write either the general risk, what is compliance risk, or the BIS, Bank for International Settlement definition also you can give. Compliance risk is the risk of legal or regulatory sanctions, financial loss, or loss to reputation a bank or finance institution may suffer as a result of its failure to comply with all applicable laws, regulations, code of conduct, and standard of good practices. So actually, if there is any questions in the paper, what is financial risk, you can just give this BIS definition for the what is financial risk. And various type of financial risk in the finance institution could be observed. As I mentioned that there may be several type of non-compliances, regulatory issues, and all that may create a compliance risk to the bank and finance institutions. This is about the financial risk. Any questions you all wanted to ask from me about the financial risk? Okay, we will move to the next one, the compliance function. So now we have studied about what is financial risk, and there were some questions. There were questions in the exam paper about financial risk. So if there is any questions, you may answer one of these as a compliance risk. And then now we are going to start the compliance function. What is compliance function? An independent function. It is an independent function that identifies, assesses, monitors, advises, and report on the banks or financial institutions' compliance risk. So this is similar to our risk management process or risk management functions. But the risk management functions, it is identifies, assess, and monitoring the entire risk of the financial institution. But if it is the compliance function, which is only focusing on the compliance risk of the financial institution. So by definition, it says that compliance function, it's an independent function. Again, it should be an independent function that identify, assess, monitor, advise, and report on the banks or financial institutions' compliance risk. Here, they just focus on the compliance risk only. And the applicable laws, rules, and standard includes primary legislation, rules, and standards issued by supervisors and market convention, code of best practices promoted by industry association, and internal code of conduct applicable to the staff members of the bank. So these actually these complaints risk cover the coverage is given in this paragraph. It includes the primary legislation, all the primary legislation rules, the applicable laws and rules and standard issued by the supervisors. For example, if it is a bank and finance company, Central Bank of Sri Lanka will be the supervisor. So the whatever the directions and circulars as well as guidelines issued by the Central Bank of Sri Lanka to the banks and finance companies, which is applicable under the rules and standard issued by the supervisors. If it is a stock brokeraging company, then of course CSA, the Securities and Exchange Commission, SEC, Securities and Exchange Commission, time to time issue some regulations to them. So in their case, it is applicable the direction issued by directions or circulars issued by the Securities and Exchange Commission. In case of insurance company, the rules and standards issued by the insurance board. It means insurance regulatory commissions. So market convention and code of best practices. Code of best practices, of course, code of conduct issued by the regulators as well as stock exchange, along with the accounting body, chartered institute, etc., could be considered as a code of best practices. And industry association and internal code of conduct. Here we have to again see that even that violating the internal code of conduct or internal practices also will be considered as will be covered under the complaints function. So this is sort of coverage under this complaints function is given in this paragraph. And role of the complaints functions. Here, of course, we are just studying the complaints functions is parallel to the or comparable to the risk management function of a bank and finance institution. The complaints function also can be considered as a part of the second line of defense. There are first line of defense, second line of defense, third line of defense. The first line of defense, who is the first line of defense? Business unit become the first line of defense. If it is a bank branches may be the first line of defense. In the second line of defense, there are two people can be considered as a second line of defense. Mainly, the first one is risk management department. Second one is complaints functions. Those can be considered as a second line of defense. And third line of defense, of course, we all know that. Who is the third line of defense? Who is the third line of defense? The internal audit. The internal audit department will be the third line of defense. Actually, there's a question here, sir. What's the difference between the legal department and complaints department in a company? In some banks and financial institution, if it is a large bank and financial institution, there may be separate department called the legal department, and the separate department, the complaints department. The legal department, of course, legal and in some institutions, legal and complaints also handled by the same people. Generally, the lawyers handle this complaints function as well as legal functions. But what is the main difference between the legal and department function in the sense? The legal department may handle several type of legal aspect related to the financial institutions. It may be some customer related case, and some are related to the litigation related to the employees. Some are litigation related to the suppliers, and any sort of the legal activities and legal advice will be handled by the legal department of the bank and financial institution. But the complaints department, of course, even though the lawyers handle the most of the time, they are handling the complaints function. The complaints function is little bit different from the legal function. The complaint function, of course, the some role, the regulations and the laws and regulations should be followed by these financial institutions. And the complaints function checking whether the financial institution or particular bank or following the particular regulations, rules and regulations applicable to the banks and financial institutions. But the legal is something different, because legal is they are just dealing with whatever the legal risk. It may be created through the suppliers, customers, or employers, or outsiders. Any outsiders may file the case against the bank and fine. Even the parata execution and all, or the loan recovery, then the legal department will cover the legal side of that activity. But the complaint function is the bank or finance institution need to be follow some or expected to be follow some rules and regulations. Whether these financial institutions are following or not, that is the complaint functions department. And actually the main function of the complaint function, simply explain, they are separate. For example, in a bank or finance companies, it is weekly basis, monthly basis, and quarterly basis. There are several returns has to be submitted to the central bank as a regulators. Maybe in quarterly basis there may be several return on even the tax department. There may be some tax returns has to be filed quarterly basis, quarterly. And but for the central bank itself, weekly, monthly, and quarterly, biannually, annually, there are several returns: IFRS returns, capital adequacy return, balance sheet, and all the things. These are the some regulatory requirement. So what this legal department will think? Whether they will make sure whether this department, it may be some department, some return may be submitted by finance department, some returns may be submitted by a board secretariat, some return may be submitted by the treasury division of the bank, and different department. So what the complaints department will ensure that all these departments are submitting these returns within the deadline, and whether they are submitting a proper return to the banks and to the central bank. They will make sure that, and they will create a sort of policies, complaints policy, and they will make sure these things have been properly submitted to the regulators, submitted to the tax department. Likewise, they will just make sure. That is the main difference between the main difference between the legal department and complaints department. Okay. So we will just move into that. So in the complaint function, we can just divide the complaint function into two. First one is there are three lines of defense: the first line, second line, and the third line. In the second line of defense, we can divide. There are two functions: risk management function and complaint function. So if there is any questions in the exam papers, the second line of defense, what are the divisions coming to the functions coming under the second line of defense, then you can answer that. It is one is risk management function, and the one is compliance function. And as I explained already, the complaints function also having several steps. Here, for the risk management functions, we have identified 4 functions: identifying, assessing, managing or controlling, and monitoring for the risk management function. But for the compliance function, of course, there are 5 functions we are identifying. First one is identifying the risk. The identifying the risk in the sense, for example, if a bank or finance institution has to submit their liquidity return or balance sheet within 21 days of the within the 21 days of the following month, but the finance department always delaying it, and there are some issues to preparing and submitting. So first they are just identifying, okay, this return should be submitted within 21 days of the following months, but this again there is an always delay submitting this return. So they will first identify that this may create some complaints risk to the institution, the bank and finance institution. Then they will identify, okay, this is a risk. Okay, so non-submission of balance sheet within the deadline to the central bank. That is one of the risks they identify. And then they will assess, like the risk management department, they will assess, okay, what is the risk, complaint risk, whether it is it will create a huge loss to the finance institutions, or this is just warning to the finance institution, what type of risk and gravity of the risk and likelihood and impact of the risk they will assess it. For example, if there is any mistakes in preparing some sort of other liquidity coverage return or capital adequacy return, the repercussions may be less if there is any minor mistakes. But if there is any mistakes occur in the statutory liquid asset ratio, and if the calculation is wrong, or the calculations according to the calculation they fail to keep the minimum liquid asset ratio, then it is subject to the penalty. So the risk may be higher. So the likewise they will assess the gravity of the risk. It means the likelihood and impact of the particular risk. And then they will just advise to the, again they will advise to the they will continuously monitor that whether that risk can be continuously, whether the risk is arising continuously, or what is the, then they will just advise that to the particular division or particular head of department, okay, this may create the risk to the bank and finance institutions, and they may you have to avoid and all, they will advise it. And this advising part may be different type of advices may come. For example, if there is any new legal or law has been introduced by the country, or any new regulation has been introduced by the regulator, in that case they may give some advice to the particular top management or some other the particular division of the institution, bank and finance institution. So that also including in the advising part. And finally what they will do is they will report all these complaints risk part, and the total risk arise from the complaints function, and the complaints risk, and what are the what are the actions have been sorted out to address this type of risk, and all sort of things will be reported to the top management. As we seen in the risk management function, the complaints function also, top management will be the responsible for the complaints function. So if anybody asks that, or any in the exam asks that, what is the process of the compliance function, you will have to say identifying, assessing, monitoring, advising, and reporting will be the process of compliance functions. And compliance functions of the purpose of the compliance function is to assess the bank and financial institution in managing its compliance risk. That is a simple objective of purpose of the compliance function is to assist the banks and financial institution in managing its compliance risk. The compliance risk is also referred to the integrity risk because a bank reputation is closely connected with its adherence to principle of integrity and fair dealing. Actually, if you see that the compliance risk or compliance function should be created as a culture in the bank, and it is referred as an integrity of risk as well, because any failure of comply with the regulations or industry best practices, that will affect the reputation of the bank and finance institutions. For example, if a particular bank failed to comply with or failed to submit a correct tax return, or they made some violations on the tax return, or even the corporate governance requirement, if they violate on the corporate governance requirement, if a bank, and if the general public get to know that, that may create a reputational risk to the bank, and it is considered as a integrity or risk as well. And then the general public may think that this bank is violating everything and they are not comply with the legal system of the laws and regulations of the regulators and all that will create. So it is also considered as a integrity risk. And as like the risk management function, here we can just, when we are studying the compliance function, we can compare the compliance function always with the risk management functions, because both are more or less similar functions. So there are different type of compliance functions, as like in the risk management functions. Here also there are centralized compliance functions, decentralized compliance functions. If it is a large bank or multinational financial institution, there may be centralized compliance functions. So there will be a chief compliance officer, and there will be a chief compliance officer, and that and there may be compliance department, separate department for compliance function, and they will look after the oversee the compliance risk of the entire financial institutions. But in some other banks and financial institutions, particularly small banks and financial institutions, there may be decentralized compliance functions. Decentralized means even within the finance department, there may be an officer. He is in charge for checking the compliance risk related to the financial department. Likewise, in the treasury department, there may be other officer he will handle the other function as well, but he will particularly assign to check the compliance risk of the treasury functions. Likewise, it's also sort of silo-based compliance functions, decentralized. There will not be any centralized department which look into the compliance function of the entire compliance function of the bank or finance institution. Here it's a separate, silo-based. The different department or divisions will have separate compliance officer or compliance an officer who will look into the compliance of that particular divisions. But centralized department, of course, in the large banks or multinational banks, we can see the centralized compliance function. But in the central bank, of course, for the banks, the centralized compliance function is necessary, and it is mandatory requirement by the Central Bank of Sri Lanka. So our banks, Sri Lankan banks, are having centralized compliance functions in their operations. These all about the compliance functions structure. And the formal status of compliance functions. Because compliance is, of course, any banks or financial institution need to follow the compliance or the laws, regulations, and other best practices, industry best practices has to be followed by the every banks, if they like or not. But the banks and financial institution, there may be a formal status of the compliance functions. Formal status means the top management onwards, they will recognize the compliance functions in the banks and financial institution and give sort of formal status to the compliance functions. And the formal status of the compliance function should be established through the compliance policy approved by the board of directors. Like risk management policy, for the compliance function also, there should be a separate policy for the compliance function. It calls compliance policy. And this compliance policy generally formulated by the compliance department or chief compliance officer, and in the board has to review that compliance policy, and board has to approve the compliance policy for a bank and financial institution. And all the staff and all the business activities are subject to that compliance policy approved by the board of directors. So that particular, the approved compliance policy itself give a formal status to the bank and finance, the formal status to the compliance functions followed by the banks and finance institutions. So if there is any questions about the formal status, you can say that formal status of the compliance function should be established through the compliance policy approved by the board of directors. And there should be a compliance officer within the overall responsibility for coordinating the bank's management with regard to compliance risk management. This is second aspect of the formal status of compliance. And the first one is there should be a compliance, separate compliance policy approved by the board of directors. Second one is there is a dedicated officer as a compliance officer, also, and who is overall responsibility for coordinating the bank's management with regard to the compliance risk management. And the compliance function staff and head of the compliance should not be placed in a position where conflict of interest between their compliance responsibilities, any other responsibility. These are the these are the activities can call the formal status of the compliance functions. First one is there should be a policy should be approved. Second one is there should be a compliance officer. And other one is, third one is they are talking about conflict of interest of the staff and compliance officer. For example, it means a compliance officer, chief compliance officer, or the compliance department staff should not be allocated to any other functions of the banking operations. Because if that particular officer assigned to some other functions, then there will be a conflict of interest that may affect the compliance function of the bank and finance institution. We can get an example. For example, if an officer, he is a compliance officer, but part-time is responsibility to prepare capital adequacy ratio of the capital adequacy return of the bank. You know the capital adequacy return, which has to be quarterly. Every quarter they have to submit it to the central bank to ensure that this particular bank is having adequate enough risk-weighted capital. That is the purpose of giving the capital adequacy ratio, the return. So an officer, he is the complaints function department officer. His full-time job is complaints function, look after the complaints function. But every quarter he has to help to the, or he has to do the capital adequacy return of the bank to be sent to the central bank. Here, of course, there is a conflict of interest between that particular officer with respect to particular officer, because he is the compliance officer, but he is getting involved with some operational aspect. Why we are saying conflict of interest? For example, if there is something goes wrong in that particular complaint, for any requirement of this regulatory requirement with respect to the capital adequacy return, and something they have not fulfilled it, or they have not submitted within the deadline, or they have not prepared something properly, then the complaints risk related to particular actions may not be escalated to the top management, because there is a conflict of interest. One officer, he is in charge to the he is in charge to prepare the particular return, as well as he is a compliance officer, so he may right to hide those mistakes. So the conflict of interest will affect the independent compliance functions. That's why it says that compliance function staff and head of compliance should not be placed in a position where conflict of interest between their compliance responsibility, any other responsibilities. Understand? Because it's conflict of interest, we are continuously studying this. For the risk management and corporate governance, everywhere this conflict of interest, we have to care about this conflict of interest. You all have any questions? Any questions so far related to which we have studied? Okay, just to check whether you are in the class, just to check. I am going to ask, because since you all don't ask much questions, I am asking just to check. The 3 lines of defense, the complaint function will be which category? Whether it is the complaint function will be the first line of defense or second line of defense. Yeah, exactly. Actually, before I am asking the question, there's an answer, the second line of defense. So it seems you all are following my class, and I think it's sort of feedback for me, positive feedback. Then I'll continue. If you have any questions, you all can ask from me. Okay. Now, so far we have studied about the compliance risk, then compliance function we have studied, and the process of the compliance functions. Then we have studied that then we have studied of the formal status of the compliance functions. Now we are moving to the compliance culture. I have already mentioned to you all that in an institutions, the compliance function should be created as a culture. So what is because the following all the rules and regulations and legal requirements and industry best practices should be created as a culture in the institutions. And from top to bottom, everybody should be encouraged to follow the requirement, the external and internal requirement and standards. Otherwise, we can't implement the or we can avoid the compliance risk. Because this compliance function should be created as a culture in the department. For example, in the when an institution, when a bank, they prepare they are just prepare the tax return, or when they are preparing when they wanted to comply something, but due to this to get some gains or to avoid some legal, so avoid some losses, if they violate some legal requirement or regulatory requirement, then if they started to play in one place, then that may spread it to the entire institutions. Because if top people are to avoid the financial losses or to get some financial gains, if they started to violate the rules, then that may become as a practice in the other operational activity of the banks and finance institutions. Compliances may be practice of the banks and finance institutions. Then the totally that may the non-compliances may be a practice for a finance institution that will create a compliance risk. That's what it says, that the compliance culture, the compliance function should be created as a compliance culture in the financial institution. What is compliance culture? Compliance culture is the work culture of the financial institution that is naturally compliant in each and every operation of the banks and finance institution. And everywhere they have to have a culture. It's like a culture. Everywhere they have to follow it. And why the compliance culture is important? Compliance governs the way banks and finance institution operates. Since compliance function is a continuous activity, each and every officer need to be conscious about the compliance functions. Okay, and how to improve the compliance function? Then there may be other questions. How to improve the compliance function? Start at top management level. That's what I gave an example. It's like a tone at the top. First, what they have to do is at the board of director level, they have to give a formal status. They have to approve the compliance policy. And if somebody is violating the requirement, internal or external standard or requirement, then at the top management level onwards, they have to start to follow those things and they have to formalize it. So start at the top level, top management level. The compliance function, it should not be expected at the lower level or bottom level. It should be start from the top management level. And align compliance with risk management. So the compliance functions, it should be aligned with the risk management functions. And incentivize ethical behavior. Because if somebody following ethical behavior, and due to that ethical behavior, sometimes bank may incur some additional cost, but we have to incentivize that ethical behavior. We have to encourage the ethical behavior of the staffs. So by doing that, we can improve the compliance culture in a finance institution. Don't ignore compliance mistakes. This is another way. All the frauds and frauds are started with the errors actually, and non-compliance also like that. First, they may start with some errors, and that errors may not be captured by the authorities. Then what they will do is they will use that error mechanism to even willful default or willful fraud. So don't ignore compliance mistakes. So each and every small compliance mistakes, it should be proper action has to be taken about these compliance mistakes. Okay, we need not to think, okay, this is mistakes, we can rectify it next time. Likewise, it should not be ignored. and use the right technology for a compliance functions. Actually, the right technology has to be should be or has to be used, and even the financial sector, finance department of the bank and finance institution, this right technology can be we can just explain that, because by automated the functions, and we can just ensure the compliance of the requirements. So these are the compliance culture we can create. These are the way we can create the compliance function. First, it should start as a tone of at top management level, and it should be aligned with the risk management function. And we have to incentivize the ethical behavior, and should not ignore the compliance mistake, and use the right technology to ensure the high quality compliances within the department, within the finance institution. So these are the thing about the compliance culture. Before going to the other sections, any questions? Okay, then we can just move into the governance of risk and compliance. These three concepts, as I mentioned, that these three concepts are sort of joint concept, and each has interrelations. The governance means corporate governance, and compliance function as well as risk management are having interrelations among them. That's what I actually, when I am teaching this topic, I'm just taking these three together. First, I start with the risk management, then move to the compliance function and the governance, because the corporate governance, because all three has the more interrelations. And the risk management, of course, we have see that the processes identifying, assessing, managing risk, and the compliance. It's also same function, but it's related to the compliance functions. And again, the corporate governance, the corporate management strategic formulation policies. Then they have to formulate the policy, the corporate governance level, and that will create a risk management as well as compliance function. So if somebody asks that the connection between the corporate governance, risk and compliance, you should be able to explain it. Understand? Because these three are related, connected, and these three has to work together with an ally. The corporate governance function of the bank, and compliance function and risk management function of the bank. And all the policies, the risk and compliance policy should be created with the best practices of corporate governance, and these people will give inputs and the risk escalation to this top management to have a better functioning of compliance and risk. That is the connection between these three connectors. And this other one is responsibilities of the board of directors for compliance functions. As I already explained you, the top management has to, that the compliance function should start with the top management. Actually, there were questions in the past papers about the compliance function should be start as a tone of the top. Please explain and all. So because it should be start as the top level, and there should be a formal status, and the compliance function should start with the top level. That's why it's giving the responsibility for the board of directors for compliance function. First responsibility. Bank's board of directors has the responsibility for overseeing the management of the bank's compliance functions. Even though the board of directors has a total ultimate responsibility for any functions of the bank and finance institutions. They have the ultimate objective. All the powers are with them, and they are just dedicated delegate the powers and responsibility, the powers and duties and powers, but they should have the overseeing capacity, and they should properly oversee all the functions of the banks and finance institutions. So likewise, for the compliance function also, the board of directors has the responsibility for overseeing the management of the bank's compliance risk. And boards should approve the bank's compliance policy, including the charter and other formal document, establish a permanent compliance function. Actually, this is we have already studied these things. The board of directors should approve the formal compliance policy, which we have studied already, and there should be a compliance charter or customer charter or some compliance charter and other formal document establishing a permanent compliance function is the responsibility of the top management. Because the permanent compliance function, it means sort of centralized compliance function should be started, and it is the responsibility of the board of directors. At least once a year, the board or committee of the board should review the bank's compliance policy and its ongoing implementation to assess the extent to which the bank is managing its compliance risk effectively. Okay, in most of the banks and finance institutions, when we are going for a supervision, we just observe that there may be nice policies, but that policies, once they create that policies, they don't review that policies. They don't, sometimes they for several years, even nobody seen that policies. But if we ask, there will be a sort of very old document. It's nicely written. Policies are available in the banks and finance institutions. But if there is any policies based on the situation, the policies also should be changed. So at least once a year, the board or committee of the board should review the bank's compliance policy. Or if it's not applicable to bank policy, the compliance policy, it's applicable to risk management policy or HR policy or any policy, at least once in a particular period, it should be reviewed. Here it says that at least once in a year, compliance policy should be reviewed by the top management or board of directors or the board subcommittee. Because in some bank there may be a board subcommittee for a compliance function. So in that case, board subcommittee can review. And it's ongoing implementation. Again, okay, they have to have the policy, and that policy has to be reviewed at least once in a year, and ongoing policy implementation to assess the extent to which the bank is managed its compliance function should be reviewed by the overseen by the bank and finance institution. Board of directors of the banks and finance institution. So these are the responsibilities of the board of directors for compliance functions. And likewise, the compliance function, the board of directors, senior management also has some responsibilities on the compliance functions. The senior management in the sense CEOs and DGM level, AGM level, those type of people, the senior management. So the next to the board of directors, the senior manager. The senior manager of the bank or finance institution is responsible for establishing a compliance policy. Actually, even though it is approved by the board of directors, the compliance department, chief compliance officer, or the senior management should encourage to or has a responsibility for establishing the compliance policy. And senior management is responsible for ensuring the implementation of compliance function within the bank and finance institution. Actually, these responsibilities are more or less similar, but they are in sort of very overall view. The board of directors, these people are in sort of operational level. They have to, the second level they have to think. And at least once a year, review the compliance policy and its ongoing implementation to ensure the policy is still appropriate, and report to the board of directors or committee of the board on matters relevant to the compliance policy and its implications. Maybe this is senior management in the sense on the complaints function senior management rather than CEOs and all. This is the complaints department senior management, the senior complaints officer or the complaints department people have these four responsibilities we can mention. Before moving to the complaints officer, do you have any questions? I can just answer if you have anything. Okay, then we will move to the complaints officer. I have already discussed to you all. There is a complaints function, separate complaints function in a bank, like a chief internal auditor, like chief risk officer. The bank and finance institution, there may be or there must be chief compliance officer. He is responsible for the day-to-day management of the compliance function. So generally, the compliance officer is the head of the compliance function. He is responsible for day-to-day management of the compliance function. And he ensures a company complies with its outside and regulatory requirement and internal policies. He is the person should has a he has the responsibility to ensure that the bank is following the particular finance institutions are comply with outside regulatory requirement and internal policies. Duties of the compliance officer may include the reviewing and setting the standard for outside communications. Compliance officer may also design or update internal policies to mitigate the risk of the company, which may arise from the non-compliance of requirements. So actually, for 2 marks questions under the one of the sub questions of the first question, or even in the structural questions for 5 marks, there are in the short notes also there are several times in the exam paper they ask what is compliance officer, or the write the short notes on the compliance officer. Then what you have to do is you have to write this. He is the head of compliance and he has the responsibility for day-to-day management, and likewise he has to ensure that compliance of the company comply with the internal and external regulatory requirement and policies. And actually you can just say that the responsibility of the compliance officer as well. It's depend on the marks. If it is a 2 marks question, you can stop with this. You need not write much. But if it is a 5 marks, you can just give something. But there was instances, there's a separate question on the responsibilities of compliance officer. At that time, you have to write these responsibilities. The first one is these. I think the responsibilities of the compliance officer is totally which we have studied so far. First one is identify, document, and assess the complaint risk associated with the business activities of the finance institutions. So as I explained in the complaints function, these people have to identify and document and assess the complaints risk associated with the business activities of the finance institution. For example, I already explained you all that this one of the business activities, this return, submitting return to the central banks, one of the requirement. So they have to just identify, document, and assess the complaints. What are the complaints they can create? Or sometimes mobilizing deposit. That's also one of the business activity. We will see later on. So there may be complaints risk as well. So they have to just identify and document and assess it. And promote the ethical conduct and compliance with the rules, regulations, and institution policies. We have studied about the compliance culture. So this is one of the responsibility of the compliance officer to promote the ethical conduct and compliance with the rules, regulations, and regulatory policies, institution policies about the bank, about the, with regard to the compliance function. They have to promote it and develop the appropriate compliance culture, which is the responsibility of the compliance officer. Identify potential threat on non-compliances. So, if they don't comply with this requirement, what are the potential threat to the banks and finance institutions? They have to. It's a responsibility of the compliance officer to identify it. Advise the senior management and compliance laws, rules, and standard and regulatory issues. Actually, this is one of the main function of the compliance officer. Advice to the senior management, sometimes board of directors, on the compliance laws, regulations, rules, and standards on regulatory issues. Because time to time there may be several changes in the regulations. There may be changes in the legal system. And sometimes that may not be understood by the top management. So the gravity of the situations. Sometimes these the changes may require the new type of business models to the finance institutions or new type of accounting system. So actually these people has to these people, the compliance officer has a responsibility to advise the senior management on the compliance law, rules and standard and regulatory issues. And complaints monitoring also one of the things. This is like responsibility the risk the complaints monitoring also one of the responsibility. And finally, handling complaints related matters. They are the overall of handling the complaints related matters. So these are the when there's a question that the responsibility of the complaints officer, you have to list it out. Oh, these responsibilities. Any questions? Actually, the Basel Committee on Bank Supervision describes some core principles for compliance functions. These two are much important core principles for compliance function. The first one is compliance function should have formal document approved by board of directors that sets out the function's standing, authority and independence. That is, role and responsibility of the compliance function should be clearly defined. This is one of the core principles of the compliance function. You know that the Bank for International Settlement, which is the, for example, the Central Bank of Sri Lanka is it's a central bank for sort of the pioneer institution of Central Bank for Sri Lanka. The central bank for all the central banks in the different countries is considered as a bank for international settlements, which is sort of highly for the supervision side, finance stability side, which is sort of high authority and which having released time to time several documents on different functions of the banks and finance institution. So according to this document, they are saying that there should be a formal document, the policy document approved by the board of directors. That's what we have already studied. There should be a formal document approved by the board of directors on the compliance functions. And there should be clear authorities, because generally it is expected that a senior officer should be appointed as a chief compliance officer. So authorities has to be clearly articulated. And independence of the compliance function is much more important. For example, if a chief compliance officer is reporting under the DGM or somebody else's, and that particular DGM is in charge for credit function or accounting function, then the independency will not be maintained in that particular compliance function or compliance officer's function, because the senior DGM may or DGM may influence that officer, the compliance officer. So independency should be maintained, and policy should be articulated, and authority should be clearly articulated. So this is the first principle for the compliance function. And the second one is reiterate the compliance function should be independent from the business activities of the bank and finance institution, which I have already explained to you how it will affect. It means the compliance officers and chief compliance officer should be totally independent from other business activities of the banks and finances. I gave an example, preparing the capital adequacy ratio. Then when a compliance officer is in charge for that preparing capital adequacy ratio also, here there is no independence. So there will be a conflict of interest. Why it's always emphasizing the independence is to avoid the conflict of interest. So compliance function should be independent and complete. So if they are asking at the core principle of compliance function, you have to say first one is the compliance function should be formally documented and clear authority has to be given. The second one is the independency. Compliance function should be independent of the business activity of the bank, and the officer should be independent. Other than that, the function itself, the division itself, compliance division itself or compliance function itself, the independency should be separated. Understand? Okay. Then there is another, this compliance testing. Actually, the last time when I'm teaching, when I was teaching, I did not included this slide. This is the sort of new slide I have included to you all, because the compliance testing, there are several questions in the exam. Several times in the short notes or the structural question, one of the structural question about the compliance testing. So it is better to studying that what is compliance testing and have some knowledge. That's what I have included this as a new slide this time. The compliance testing is the technique that is used to validate whether the systems and control of the organization meet the externally and internally prescribed standards. So this is sort of testing, or like internal control system testing or like other testing. This is the compliance testing, sort of technique which validate whether the finance institution follow the system and control of the organization which are prescribed by the externally and internally standards. So here we have to have a other important point. Keep in mind, when we are checking the compliance functions or compliance risk, not only the external requirement, we have to keep in mind about the internally prescribed standards also has to be met by the staffs. So compliance department, it's a compliance test is sort of techniques that validate whether the finance institution follow the system and control of an organization meet the externally and internally prescribed standards. The second one is the compliance test provide an financial institution with the compliance information necessary to monitor its compliance risk exposure and self-correct as necessary. Because the compliance test which gives sort of information to the finance institution to monitor the compliance risk exposure and self-correct if necessary. And it also helps the regulators to assess the level of compliance by regulated entities in order to determine the level of regulatory interferences if needed. So if there is any Any sort of questions about the compliance testing? You may answer or you may mention these 3 points as a compliance testing. Okay. Any questions you wanted to ask? Okay. Then we have other one. We have other thing. We have this is also we just seen in the exam as well as for knowledge purpose. Also, this slide may be important to you all. The comparing the compliance functions and internal audit functions. In the 3 lines of defense, these compliance functions become a second line of defense and internal audit functions become third line of defense. Generally, the compliance functions ensure that all the rules and regulations are followed in the day-to-day operations of by the banks and finance institutions, which ensure that all the rules and regulations are followed by the banks and finance institution in their day-to-day operation, which is sort of like in the risk management function, but this is about only the compliance risk. But internal audit gives sort of assurance on the system and procedures. So this is the first thing you have to keep in mind. First one is compliance functions ensure that all the rules and regulations are followed by in day-to-day operation. That is sort of the operational activity, that whether it is followed by the day-to-day operation. But the internal audit given assurance, the word assurance is important. Internal audit give assurance on the system and procedure, whether the system and procedures are adequate enough. They are giving sort of assurance to the top manager. And second one is, as I mentioned, compliance function from second line of defense, but internal audit forms third line of defense. So compliance function involve the present and future, because they are just ensuring that whether in present their regulations and internal control system regulations are followed or not. So they are just deal with the present and future, but internal audit function involve past and present. They don't think about the future. So this is one of the example. So one of the difference, the compliance function, the present and future, but internal audit function involved with the past and present, because they are just thinking whether in the last year or last period, whether all the internal control system are followed in the each and every business, sort of past, post-mortem. And in the future also, in some cases they say that they will check whether currently they are following the internal control system. And finally, internal audit function is more independent than the compliance function. That day, I think last class I have teach you all that the independent wise, the ranking. Who has the more independency? In the 3 lines of defense, the internal auditor has the more independency. And the second, the risk management chief risk officer or the compliance officer will have the less independent. And the branch managers have, they may, of course, they may not have much independency. So in the 3 lines of defense, internal audit and internal audit has more independency. Compliance function or risk management have the comparably less independent than the internal auditor, but their function also should have independence. Why we are saying comparably low? Because internal auditor has directly reported to the audit subcommittee and the board, and they may not have any connection with any say with the chief executive officer, CEO of the bank and financial institution. But this risk management and compliance functions, they have to, to a certain extent, they have to work with these CEOs and other hierarchies to the implementation purpose. But internal audit, of course, they are just sure. Okay, I'm just going to ask from you the one questions. When comparing the compliance function, internal audit function, and external audit function, who will have most independent? Whether the compliance officer or internal auditor or external auditor, who will have most independent? Just I am expecting the answer from you. Yes, external auditor. Because external auditor may have more independent, because they are appointed by the shareholders in the annual general meeting, and they will have more independency. So the compliance functions, now when they answer questions, if they wanted to compare the compliance function and internal audit function, you have to mention these four aspects. Understand? And finally, in the compliance function, of course, the Central Bank of Sri Lanka issued the circular on compliance function time to time with regard to the compliance function of the bank. Accordingly, in 1998, Central Bank of Sri Lanka issued a circular on appointment of compliance officer. According to that circular, the bank should establish an independent compliance function to ensure the compliance in respect of banking and other statutory requirements. As I explained to you all about the two type of compliance function, decentralized and centralized, I say that in the banks they have centralized and independent, more independent compliance function. And then the other requirement is bank should have adequate policies and procedures to ensure compliance with laws and regulations. Third one is bank should appoint a compliance officer. So based on the 1998 circular, in the banks there should be three requirements. First one is bank should establish the independent compliance function. Second one is bank should have adequate policies and procedure to ensure the compliance. And third one is bank should appoint a separate compliance officer. This is implemented in 1998. And then they, in that same circular, it refers the terms of reference of or TOR of the compliance officer. Accordingly, develop policies and procedures designed to eliminate or minimize the risk of breach of regulatory requirement, promote throughout the business that the belief that compliance is not a negative process but a positive contribution to the success of bank. When introducing new business, finance instrument or conform to regulatory requirement and internal compliance and ethical standards. Actually, I just like to discuss something further about this second point. Even in the risk management function or compliance functions, most of the banks and financial institutions are thinking that they believe that it is burden to the institutions. They don't think this is as a positive aspect, because the most of it is not only Sri Lanka, it is even in the international wide. The business people are, or the company directors or the those who are involved in the business operations of the companies, banks, and finance institutions, they just think about that the compliance and regulatory requirements are burden. Regulatory requirements are burden to their business, and it creates some additional cost to the banks and financial institutions. But they don't recognize the benefits they are getting by following these requirements. Why the central bank or regulators put some requirement or some regulatory certain regulatory requirement to the banks and finance institutions? Because simply because they wanted to ensure the safe and soundness of the banks and finance institution, not to punish the banks or finance institution. For example, statutory liquid asset ratio 20%. Why the central bank asking? Because they are asking that if there is any liquidity risk arise from the banking operation, they have to maintain, they have to add to manage that, they have to maintain certain liquidity requirements. So certain to mitigate the liquidity risk, they have to keep some certain stock of liquidity. That's why they are asking to maintain statutory liquid asset ratio of 20%. But the banks may expect that, okay, this may harm the banks because they would have given the using these funds, they would have granted more loans and advances, but due to this requirement they have to maintain 20% the low income generating treasury bills and bonds. Likewise, they may have the negative impact. So promote throughout the business the belief that compliance is not a negative process but a positive contribution to the success of the bank is the TOR of the compliance officer. And the TOR, it's continuing that maintain regular contact of good working relationship with the regulators is one of the TOR. Another one is promote across the compliance network best practices developed in the area of compliances. Actually, nothing to explain here. I can just read out it because these are straightforward things. Understand and apply new legal and regulatory development relevant to the business of the bank. Ensure that compliance policies and procedures are closely communicated to the management, members of the staff, and provide timely reports to management by highlighting the regulatory development, change in the rules, and other development. This is again coming under the advisory function of the compliance officer. They have to highlight the regulatory development and changes in the laws and other development. Highlight the serious or persistent compliance problem, and where appropriate, work with management to ensure that they are restricted within the acceptable. They are rectified within the acceptable time. Here, of course, in this TOR, we can just define the independency. The highlight the serious or persistent compliance problem, and where appropriate, work with management. Underline the word work with management to ensure that they are rectified within the acceptable time. So since in the certain cases, this compliance officer or risk officers has to work with management to implement the compliance function or risk management function. That's why they are not considered as a high independent people. The independencies may be harmed by these activities. That's why when we are ranking the independency, we are ranking the compliance officer and risk officer in the lower level. And the final represent the compliance function on relevant internal and external committees. So these are about the compliance function. Actually, I'm going to, this is about the internal circular, the CBSS circular on the compliance function. The next section is anti-money laundering and combating the financing of terrorism. This is also related to the compliance functions, not exactly, but it's also related topic, and there are questions on the anti-money laundering and CFT combating financing of terrorism, as well as the KYC and all. So I'm going to talking that now. Before that, this is all about the compliance functions we have already discussed. If you all have any questions, I can take you through all. Before that, I just wanted to just summarize the compliance functions. First, we have started with the compliance risk, and we have just discussed about what is compliance risk, and then we have discussed about the compliance functions, which is a independent functions on identifying the bank's compliance or related to the bank's compliance risk and all. Then we have just studied about the role of compliance functions and basically the compliance process. There are 5 processes we have studied: identifying, assessing, monitoring, advising, and reporting. And I gave an example to you all about that as well. And then we have segregate the compliance function into 2: centralized compliance function and decentralized compliance functions. And that we have studied about the formal status of compliance functions, which the top management has to give duly recognition and has to approve the policies and give the responsibility to the staff, and has to give give a sort of formal status to the compliance function. And then we have studied about the compliance culture. In the compliance culture, we have studied about how to improve what is compliance culture and how to improve the compliance culture. And we have just have a combination of governance, compliance, and risk in this slide. And then we have just teach about the some discuss about the responsibility of the board of directors on the compliance functions, and the senior management. Both are similarly there are similarities, and basically these for the top management and senior management of the compliance function, they should approve the policies, compliance policies, and make sure the implement of the compliance policy, and review the compliance policy, and time to time just discussing whether the compliance function is implemented properly. And then we have studied about the compliance officer and his function, his responsibility as a compliance officer also we have discussed about, and there are several compliance functions we have discussed. And then core principle of compliance functions, and then compliance test. This of course for the there are questions on the there were questions on compliance testing. So this is sort of validation process whether this financial internal control system and procedures follow the this internally and externally prescribed standards and like. Then we have studied about the comparison between the compliance function and internal audit functions. Where we have identified 4 differences between the compliance function and internal audit function. This is again and again there are questions, so you have to keep in mind about this slide. And then finally we have studied some CBSR regulation or circular on compliance functions and their TOR. That's all about the compliance function. Now we wanted to move into the next function. Before that, you will have any questions? Okay, there's a question. Is compliance testing applicable for internal control best practices only? Actually, the compliance, if you move to the particular compliance testing, it is not only for the internal controls and best practices, which validating whether the entire compliance with other systems and control of the organization meet externally and internally prescribed standards. So, which include everything. Not only the internal controls, not only the complaints, as you mentioned, not only the best practices, which include all the prescribed standard. All the prescribed standard means laws and then regulations, regulatory requirements, as well as industry best practices, internal prescribed standards, as well as external. Everything will be covered under this testing. That is the compliance testing. And the internal control, they may have the separate, internal auditor, they may have separate, but it doesn't mean here. The compliance testing is something different, which explain all the which have the validating all the system and controls related to the externally and internally prescribed standard. It's everything. Okay, if you all don't have the questions, actually, I can just move to the anti-money laundering and combating terrorism. But there are 12 slides. 12 more slides are there. So if I started today, I may not able to finish. Okay, I'll just give a sort of introduction this, and then we will fully study at the next class. But I'll just start. Shall I start and finish? Yes. Time is not enough to start and finish. Okay, I'll just give a sort of introduction to you all and stop the class. And then next class we will just study the entire thing about this anti-money laundering and combating terrorism finance and other requirements. Actually, in this anti-money laundering and combating terrorism finance, there are 2-3 concepts. This is in the banking and finance business. Before going to the, we will just talking about the gender. Before going to in the banking and financial business, these days, I think it is sort of very recently developed concept, the anti-money laundering and combating terrorism, financing of terrorism. And these are the central bank financial intelligence unit. You all may heard about that FIU, which is the regulatory body checking this anti-money laundering and combating of financing of terrorism activities in Sri Lanka, and under which the customers or banks should have the knowledge about the customers which they have the dealing, and under this they should have understanding about the customer and their transactions, and if there is any suspicious transactions, they should inform to the central bank. And this is a most popular concept we have studied, and there are questions in the question paper also. Know your customer. The know your customer enable the bank to know or understand their customers and their financial dealing to be able to save them better and prudently manage the risk of money laundering and financing of terrorism. Even if you work in the bank, you may know the better than me. Or if you are a customer of the financial institution, if you all wanted to open an account, or if you all wanted to open a saving account or anything, then the bank may ask the residential proof, and sometimes bank may get your photos, and they wanted to have some information about basic information about your earnings and everything. And not only that, they will through the system they will continuously monitor whether what type of deposit you all are making and what is the amount you all are usually depositing. For example, if I am always depositing 50,000 to a particular bank account, and suddenly if I started to deposit high amounts, then that particular bank will get alert and they may ask the source for that money, which is under the know your customer. They just manage the risk of money laundering and financing of terrorism. Even then, recently there is another concept. This is KYC, know your customer concept. But recently there is another concept, the KTC policy, know the transaction. No, sorry, KYT policy, know your transactions. KYT, of course, that even this KYC deal with the customer wise, but KYT is each and every transaction where the bank deal with the customers or counterparty should have the clear knowledge or understanding what type of transaction they have to deal. So it is about even in the not only the customer level, each and every transaction level, bank should have the vigilance. And recently, of course, the under the this KYC and AML and CFT policies, there are some requirement, some international requirement has to be complied by the each and every country, and Sri Lanka failed to comply with that requirement in 2000. I think 2015, 16, 17 time or 14, the earlier period. And then the Sri Lanka was blacklisted under the or grey list, put into the grey list, and some dangers to these KYC policies. And then the central bank and other finance institution, banks, and then everybody's work together and comply with the requirement. And I think 2019 September, December period, the Sri Lanka was lifted from the grey list. Because when the Sri Lanka was in the grey list, it may create a lot of cost to the financial cost to the customers when they are dealing with the counterparties. So these are the sort of very basic background information about the anti-money laundering and terrorism financing. And there are some relevant acts as well. We will see this in the next class, of course. And in the next class, of course, I have planned to discuss about this anti-money laundering and combating financing of terrorism and relevant legal aspect and all. Then move to the some past paper question on compliance as well as this anti-money laundering things, KYC things. So that's my plan on the next class, and after that we can move to the corporate governance. Okay, if you will have any question, I can answer. Otherwise, I can just finish the stop this class. Okay, we will see the next class. Thank you so much.